What is going on, investors? Hopefully you guys are doing well out there. I wanted to get on a video really quickly and talk about two stocks that we regularly cover here on the channel. The first one is PayPal and the second one is Tesla. And both of these stocks, coincidentally enough, are dropping by about 11% during the regular trade. Now I want to get on here and look at the charts and see if there's any areas where we're finding some levels of support with these stocks so we can think if this is a good buy the dip opportunity either on PayPal or Tesla when it comes to where these stocks are today. Now, PayPal is dropping. I think it's rather obvious. The company came out with their Q3 earnings yesterday, and it was interesting. I was watching this stock in the after hours. It traded all the way up into here to $240 per share, which is actually a level of, if you could get above 240, actually would signal kind of a bottoming formation, at least where PayPal has been historically. The other thing that we noted on the video was this $225 level or so has been an area of support for nearly a year over at PayPal. Well, unfortunately for PayPal investors, the CEO got on a conference call and really disappointed things because that's when we saw PayPal stock start dropping rapidly. The CEO mentioned the fact that their revenue growth in the upcoming quarter is expected to be about 18%. That has analysts worried about the eBay payments migration away from PayPal, basically not giving it an exclusive access to that it's starting to hurt PayPal's revenue growth, and PayPal's going to struggle coming up with new ways to generate revenue growth. Now, what also came in today was Morgan Stanley downgraded the stock to 265 from 340. Oppenheimer came in and downgraded the stock to 268 from $329 per share. Truist came in and dropped the share price all the way to $200 from 275. Citi came in and dropped the price target from PayPal from 300 down from $350 per share. And then finally, Jefferies came in and dropped the price target to 255 from $280 per share. Now, from a technical perspective, we have bounced into an area where it makes a little sense with PayPal, this $200 level basically being the low that we saw on PayPal shares during the regular trade today. This $200 level being some areas of support that we saw back last year from about August to November. The stock actually traded in a pretty tight range from about $180 per share up to about $210 per share. Now, naturally, this is probably where a stock will want to take a little bit of a breath since it's been on a very, very epic downdraft over the last few weeks. What I notice on this chart too that really stands out is investors were really buying the dip on this stock as we headed into earnings. I hope you guys can see this as I'm circling it. These volume bars over the last week with PayPal, especially today, but that's probably expected when a stock breaks trend and breaks technical areas that were pretty clear to the market. Well, this is massive volume considering what PayPal has done over the last year. So what I'm expecting is as PayPal, if it's able to walk back up to this $225 price range, well, that is going to be a hard level of resistance. I would actually expect sellers to kind of step in here because a lot of these folks are probably underwater their shares, and depending on how quickly PayPal can rebound. Now, if we can get back there later this week, we can technically bounce at 205, get all the way back up into this area where so many people accumulated PayPal shares before earnings. Well, I don't necessarily think it's going to be that hard level of resistance, but the more PayPal lingers down below the $220 per share range, if it lingers in this range from 180 up to about 210, even up to 220, well, these people are stuck and they're looking at other stocks in the market that are soaring, that are going up, that they could be using their money to while they sit in an investment that's absolutely fallen off a cliff. The other thing and the other saying that goes around Wall Street is never try to catch a falling knife. Personally, I would wait for this one to consolidate just a little bit before I decided to hop in on this one, because we are just making low after low after low after lower low on this one. The trend is absolutely a friend in this one, and it looks like this stock is completely broken down, but I would expect it to find some footing down here between 180 and about where the stock is trading today. I would not necessarily want to step in on this one unless I was doing some shorter term kind of swing trade, a bounce trade, a rebound trade back up into a level of supply, which we have on this stock right now at about $225 per share. Now, Tesla is tanking on a little bit more complicated news, okay? So I think most of you probably saw this over the weekend. Elon Musk put up a Twitter poll, and he says much is made lately of unrealized gains being a means of tax avoidance. So I propose selling 10% of my Tesla stock. Do you support this? Then this poll, not necessarily something that it certainly would catch people's eye, but he followed this up by saying, I will abide by the results of this poll, whichever way it goes. And so that had people concerned because a 10% selling of Tesla stock by Elon Musk certainly would trigger some worries. But I think Elon Musk is playing chess here, while a lot of other people think he is playing checkers, because it has been reported that Elon Musk is facing a $15 billion tax bill, which is really the likely reason that he is selling his stock. But I kind of like how Elon Musk got out in front of this, put out a Twitter poll, kind of made it kind of funny, because if Elon Musk would have if we would have just got the SEC filing in a couple weeks that Elon Musk dumped $15 billion worth of Tesla stock when Tesla is trading or was trading at all-time highs, that would have had investors incredibly nervous, and maybe myself to a certain degree, and this stock would have likely tanked about as much or even more than it did today. But the way he did it was kind of subtle and was kind of interesting. Now, what it also did, though, is that a relative of him, Kimball Musk, actually sold some of his holdings as well. And it was, I think it's rumored, I don't know if this is a fact, but Kimball Musk might have sold before this Twitter poll was even posted. So these things have been likely telegraphed by Elon Musk. We also had Michael Burry from The Big Short fame. He pointed on Twitter, pointing to Musk's personal loans, which are using Tesla as stock collateral. Now, this is absolutely nothing new. And in fact, Elon Musk is referencing the loans that he gets somewhat in this tweet by the fact that he takes out loans against his Tesla stock in order to avoid paying taxes on realized gains. So Elon Musk basically has to sell Tesla stock because he's got this big, gigantic $15 billion tax bill due. It's more than likely that the banks have lent him collateral on Tesla stock, have either tapped out on that or want him to raise some cash. Elon Musk just happened to do it in his own style, in his own way, and this stock is now heading lower. I think we can put a cap on this stock up here at about $1,200 per share. This stock has done this many, many times. So we see here back last year, late last year, basically a year ago, this stock was down here at about $405 per share, and literally about 2 months later, it doubled up to about $900 per share. So if you own Tesla shares, a 10% move up or down really shouldn't concern you at all, because this stock can go on triple-digit moves over the course of just weeks. Now, the stock retraced and we identified kind of an upward channel on this one. We thought that when it broke above 900, this thing can run, and certainly it did. Now, if you ever see this type of formation, we can pull up stocks charts like NVIDIA and see a similar type of formation. If you don't want to lose out on selling near the top, just put a trailing stop loss or some kind of stop loss, and maybe that you bump up every day or every trading day. It's really easy to just do it with a trailing stop. And then as this stock starts coming down, depending on how you set that trailing stop, you will sell out of this. So, but I would bet the most of us that are watching this are really in Tesla for the long haul. And so we are actually looking for areas to buy the dip on this one. Okay. We're looking actually for Tesla to pull back, and we're looking for areas to buy the dip. Me personally, given how steep this decline was today, and on top of that, I think Elon Musk is likely going to step in here and sell a boatload of shares. And unless he does that in some kind of private transaction, maybe with an institutional investor or something like that, well, this stock was likely looking like it wants to head lower. The most obvious spot where I think you can pick up Tesla shares are down here at about $900 per share. I would expect psychologically this stock to find some footing at this $1,000 $100 range as well. It could be that we just start a new consolidation pattern, and that's what I would anticipate with Tesla going forward. Is I think we'll start a new area of consolidation, because look, this stock cannot just continue to go up 30, 40, 50% in a month. It has to take a breather. I would expect this to come down here to about 900, bounce back up into the $1,100, $1,200 range, probably get rejected again, just like we did this time last year. Stock bottomed at 400, topped out at 900, retraced back to 550, and then went all the way up to 1200. I think we're in for a similar pattern with Tesla. And if you like this stock, you buy it on these dips back to areas of support. Right now, that area appears to be about $905 per share. Hopefully you guys enjoyed this video. We'll be back again soon with lots more. Good luck with your investments.